It's my absolute pleasure to introduce Hugh Karp to the Encode Club AMA crowd for what should be a very fascinating event looking into all things insurance on the blockchain. Hugh has a slightly different background to the usual kind of blockchain founder, in that he worked for many years at the height of insurance, which it's not, I guess you couldn't call it traditional finance insurance, but it's certainly a kind of one of the big sectors in our kind of typical business society. He is Australian by birth. He was educated at the Australian National University. We might have one or two people from there today, where he studied to do actuarial studies. I've probably said that terribly. Before spending 9 years in the insurance sector, originally at MLC and NAB Wealth, before moving on to Munich, where he was, by the time he left, was the CFO of UK and Ireland. Before founding, well, he founded Nexus a little bit before that, before moving full-time to Nexus, and the last few years, having watched their growth from the outside, have been quite tremendous, to the point where if you think insurance and blockchain, you think Nexus. And he's going to lend his insights on his career, about how he's grown Nexus, what's coming next, because as fascinating this journey has been before, what comes next, I think, is going to be even better and even cooler. So Hugh, thank you so much for being with us today. A note on format, everyone. First 15 minutes will be questions from me, just to get the conversation started, and then we'll hand over to you all to ask whatever questions you want. And I think pretty much every topic is up for grabs. So do ask about whatever you want. Just a couple of little words of to note, this is a safe and happy and friendly space. So please, if there are any bad actors that you spot, do just let George and I know. You do get occasional people joining Zoom rooms that are here just to kind of cause trouble. It happens very rarely, but if you do spot anyone, if anyone's messaging you, just message us and we'll sort it out. And in general, let's just have a fun, great event. So Hugh, thank you very much, first of all. I wanted to kind of ask the standard question we ask, which is, when you were a student back then, what was you obviously you obviously had a career mindset in mind. Where did you think you'd be kind of 20 years later? Has life panned out as you kind of saw it back in 1998?
I honestly have no idea. I can't really remember what I was thinking then. I guess I was more on the lines of a standard, actuarial insurance type career, really. I guess that's what I did for quite a while. And I guess I never really probably thought of doing my own startup back then. Yeah, I guess I got interested in the tech, and then I kind of went down the rabbit hole. And as happens in this space, once it kind of gets you, it's hard to doesn't really let go. And so I guess I decided to transition out of the normal insurance stuff and do a startup.
Very good. And what was your experience like over the kind of roughly 17 years in the insurance world? Did you enjoy it? Did you find it a bit slow? What was your general experience? I guess that in a way led you towards blockchain when you decided to make the switch.
Yeah, I mean, I really enjoyed it. I really did. I think I learned so much working for different companies, and I spent the first several years still studying, doing the professional actuarial exams, and basically went from there. Progressed in different roles in different parts of the organization and got a lot of experience, and started getting involved in big things like M&A deals and a whole bunch of stuff. So I got a really wide-ranging actuarial experience, and then coming to London, starting with Munich Re, that's kind of another kind of big learning experience, getting involved about how things really work in the back end of the insurance capital markets and what happens there. And I guess it kind of gave me a really good base for several things, kind of really understanding how the insurance industry works. Two, also managing large groups of people and things. But I guess at some point I did get a little bit jaded and found it a bit slow. But that only really happened the later end of being with, Munich Re in London. And it's just, I think I kind of realized that all we were really doing was shifting big amounts of money around balance sheets and arbitraging regulatory capital, rather than actually helping people right at the. It felt a bit too distant for me from the kind of end customer, and I guess when combined with the fact that I was really fascinated by the tech, that's kind of when I decided to make the leap. I guess from the kind of tech side of things, I did do some like really basic computer science courses like pre-university. I never kind of went with that, but I have had some kind of interest on that side of things before, but never really pursued it heavily. So it's been a semi-interest on that side, but definitely kind of actuarial core. I don't code. I can't code. I did code at one point in my life, but I can't do that anymore.
Very good. I never like asking this question, but I think in this case, this question works. How did you get into blockchain? Because again, you were doing something very kind of traditional, and you've moved over to blockchain. So how did that process actually start?
Yeah, I mean, I think it was about 2010, I guess. I, heard about Bitcoin on some random internet forum, and then just basically started going down the rabbit hole I just found it fascinating. I think the thing that really got me was you could transfer value from one person to another with no one else in the middle. And I didn't really understand how it worked technically, but I played around with it for a bit, and I found it really interesting. But because I guess I didn't really know what to do with it, I kind of left it alone, and then kind of heard about Ethereum several years later, and that's when I kind of got back into it, and it all kind of clicked for me at that point. About if you can write an if-then statement, then you've got a bit more flexibility. Then you can write an insurance contract, and therefore you can kind of make that whole thing work, which I found. I mean, in reality, like an insurance entity or is actually really started from just communities sharing risk together, just people sharing risk together, and so this tech actually allows us to do that at a massive scale. And so I think fundamentally, just the technology is really social and coordination focused, and a mutual is exactly that, and so an insurance is exactly that, and so I think it fits really well together.
Very good. When you left Munich Re to say, "Oh, I'm going to start my own kind of blockchain insurance," what did people say within Munich and within the kind of more general insurance industry?
People, the people kind of close to me and stuff knew and weren't surprised. I'd been talking about stuff for a while. I was kind of doing a few kind of internal blockchain initiatives. I was getting involved on that, kind of just off to the side, helping out, because I was one of a few people that could kind of talk about it sensibly. But then they kind of knew what I was doing, and they were actually supportive, and they kind of let me work part-time on it for a while and transition into it, which was really valuable, and kind of in return I talked to them and taught them a lot about how it worked and how what this tech could do, and what they should be looking out for.
Very good. And so you founded Nexus for the first time founded Nexus in the last stages of 2017. Everyone here should be familiar with Nexus, but if they're not, how would you describe Nexus in a few sentences?
Yeah, I mean, it's basically, as I kind of alluded to before, it's a bunch of people sharing risk together on their own terms, and using the blockchain to coordinate. And we're starting with specifically with crypto risk. So our first product was smart contract cover, which basically covers smart contracts against hacks or bugs. So we built it because I saw the DAO be drained live. And so I was watching the scan and seeing all the value come out. And so, I kind of thought, wow, if we're going to be successful here, we need to kind of cover these risks. So that's the kind of, that's the event that we're trying to protect against primarily.
And a lot of the question we often get asked by kind of hackers within Encode is that, I'm non-technical. How do I build and how do I do something in blockchain? And actually, the answer I usually give is learn to code. In your case, non-technical, you said you coded a bit, but probably not enough to have enough time to build Nexus while you were kind of juggling your job. How, from a non-technical perspective, did you find a co-founder? Did you find someone to actually build this out, especially at the kind of earlier stage?
Yeah, I mean, that was interesting. I guess from my experience, especially as my role as CFO at Munich Re, and I was also kind of semi-responsible for the tech side and like all of the accounting systems and actuarial systems and stuff. And so I had spent a lot of time working closely with the tech side of things, especially writing out massively detailed business requirements. So I had a lot of practice with that, and so that definitely helped. My approach was at the time, basically anyone with any coding experience who was potentially a co-founder, like, was just doing their own thing. And so I searched for a while for a co-founder, but didn't quite get there. Then Ethereum went up in price a fair bit, and so I'd sold some of that that I had, and used that to basically pay for a proof of concept, get someone to do a proof of concept, and then kind of raise a seed round off the back of that and went from there. So yeah, I was pretty much I was a solo founder, basically because it was just a bit challenging to find the right tech skills in a co-founder at that point in time. So just kind of went one step at a time and went from there. I probably wouldn't recommend that approach necessarily if you had the choice, but that's the way we got it done.
And did you, when you were having early discussions, obviously Nexus has a very kind of specific funding model because you have to raise money for the cover, and you also raise money as a company, and have done very well in both respects. In terms of kind of from an investor point of view, did any of them say, "Oh, you're a solo founder, this is the problem," or did they think, "Wow, okay, someone needs to do insurance properly. You have the experience to do it. You've clearly got a good proof of concept." How was that? How did that all go?
Yes to both of those, basically. That was a definite pushback from a lot of people when we were trying to raise funds in our seed round. I think that the people that funded me initially, KR1, London based, I guess, or UK based group, and yeah, I think they basically, I think they backed me because they like backing people that seem to know what they're doing. So, hopefully I knew what I was doing in the insurance space and could kind of make this work.
Very good. I've got a few more questions before we hand over to all of you guys. But if you, just a reminder on format, please raise your hand if you want to ask. There's a raise your hand function in Zoom if you want to ask a question live, or we've seen some questions already come in on chat, or put them in chat and then George will read those out. But going back to the kind of, let's actually fast forward a bit. Nexus has had a few kind of big years. It's been very fun, growing at extremely fast rates. What do the next 5 years look like? So did you say when you were in 2017, did you see you being in this position now? And how did your worldview change then? Change now to what it was then? And also where are we going to be in 5 years' time?
Yeah, I think it's always very hard to kind of work out where you're going to be in 1 or 2 years' time. I kind of have this approach where you go, I know where I want to be in 5 or 10 years' time. I know what the next few steps are, but there's this big gulfing gap in the middle where you don't really know, and it doesn't seem worthwhile planning because you can pivot a million times. So to me, I like keeping the kind of grand vision in place, knowing what we're doing over the next several months, but startup land is very variable, and so you need to be able to pivot and stuff. So, planning details out for 1 to 2 years doesn't make too much sense a lot of the time. So anyway, that's the approach we've been taking. So yeah, I'm like, didn't really know where we would be at this point. DeFi has obviously gone massively well, and we've kind of been a key part of that, hopefully. And so, that's been really good. I don't think I ever would have thought it would have been this much traction this early, but it's really good to see. Yeah, sorry, maybe I missed. Maybe there's another part of the question I missed there.
I think I asked way too many questions in one. I mean, let's go on the kind of DeFi trends. And so obviously we had the DeFi summer last year, which seems to be a kind of catalyzing moment. Were you kind of waiting for a moment like this for kind of with Nexus, or did you have a kind of plan that was like, well, we're going to play the long game anyway. Blockchain needs insurance. Blockchain needs insurance for itself, and insurance needs blockchain. In fact, let's actually abandon those two questions. Which do you think is more important? Blockchain needing its own insurance, or insurance needing products that use blockchain in order to become more efficient?
Blockchain needs insurance, basically. Any economy needs insurance as basic financial infrastructure, in my mind. And it allows other people to take risk. You can't you can't build anything without an insurance industry, really. No one's going to launch a rocket without insurance. No one's going to build a train line without insurance. No one's going to do all these basic things without insurance. And so I think we're building a new economy, and things can always go wrong. There's always extreme events. And so that's kind of the way I view it. So essentially we're there. I believed it was fundamental and waiting for the economy to kick off. And obviously it has done recently. So it's been great.
Awesome. Right, let's start getting to the students of the question. So we have four kind of more partner societies for this event, student clubs and societies. One is Legal Chain from the University of Leeds, or come out of the University of Leeds, for promoting all things kind of legal tech and legal blockchain. Cambridge Blockchain are also co-partners for this event, Harvard Law School, and we have the global Fintech network based out of Singapore and their constituent societies. So thank you all for kind of being our kind of core partners for this event. But we have a question now from Legal Chain. I think they have some questions as well. George is outside.
I am outside.
To ask your question.
Hi, can you hear me okay?
Yes.
Yeah. Hi, Hugh. Thank you for coming on this event. So I'm part of Legal Chain, which is a student-led educational platform looking at sort of the regulatory side of blockchain. And my question is, obviously you are insuring against like errors in code on other blockchain platforms. What happens if there's an error in the coding on your platform? Do you have like, other insurers that insure you as a company? And how does that work?
Yeah, good question. Right now, there aren't many other insurance platforms out there, so pretty much no. Though a few small ones have done some stuff, but not really anything material. So basically, there's always the risk that the insurer fails as well, and part of that is the self-referential risk that we're running smart contracts and we could have errors in our own smart contracts. From the customer point of view, they only really lose if both Nexus and the protocol that they have their money in have a hack at the same time. So that's a relatively unlikely scenario. So it's still, from a customer point of view, is they're kind of massively better off in terms of a risk perspective by having Nexus cover. So hopefully in the future, more and more solutions will come out, and we will be able to buy some cover on ourselves. But right now, there's nothing really out there.
Okay, and then I just have a question from one of our members, Harry Swindon. So if Harry, you'd like to join the stage.
See if we can find Harry.
If he joins, I don't know.
He's there, I see him. He is here. There is a Harry Swindon.
Hi, can you hear me?
Oh,
there we go. Right, I need to get him on. There we go. Everyone's outside today. I'm very jealous.
Nice weather.
Look at that weather.
Yes, am I right to ask my question?
Yeah, go for it.
Have there been any fraudulent attempts to decline claims, and do you think your approach to de-incentivizing fraud will need alterations as your platform develops?
Not as yet. Yeah, that event hasn't happened yet. So I guess the claims that we have assessed so far have all been pretty clear from a yes or a no perspective, one way or another. Our goal is to make the economic incentive game effectively that we have around claims assessment be as powerful and as strong as legal and regulatory guarantees of a general normal insurance company. So that's our goal, but we don't for a moment think that we've got it perfect from the first time. But we're definitely working towards that goal, and I guess we need a bit more feedback and more claims to be assessed before we actually change anything. So it's working well so far, but it definitely needs more battle testing.
Very much.
Awesome, thanks, Harry. Right, over to George to ask some of the questions that are coming through fast and furiously on chat. George, do you want to pick up the three earliest ones that have come in?
Great, yeah. So we had one from Thomas, which is, were you interested in tech at university? But I think you've covered that one already. Sarah's asked, what are big insurance doing about crypto at the moment?
Not too much. There are a few niche players starting to do some stuff around the edges, but basically no one's covering any material crypto risk at the moment, which is perfect for a community-based mutual to give it a crack. So that's kind of one of the main reasons that we're doing what we're doing, serving an underserved market, because we think that's kind of probably where we're going to start. It doesn't make sense for Nexus to offer cover or insurance in a highly competitive market, because the end users would likely choose the big insurance company over us. I'd say that would probably make sense. So, you know, we're here to serve the underserved markets.
Awesome. And Carlton's asked, would you recommend students to go into a career in insurance like you did, or would you warn against that or anything like that?
Oh, I found it really valuable. I mean, I studied actuarial, so I'm going to end up in an insurance company. So, you know, I guess there's not really much. I kind of made that choice at university, really. But yeah, I mean, I found it fascinating and stuff. But it depends what your interests are, obviously.
Okay, and then a final one for now from Nicola, who asked, what do you need help with? I think they're offering their services up. They said funding, hiring, distribution channels, translation, everything.
Hey, Nicola. Yeah, basically distribution and stuff is one of the key things we're building out at the moment. So that's kind of one of our main focuses.
Awesome. I'll hand back to Anthony.
Right, let's go to see you from Cambridge Blockchain Society to ask his question.
Cool. Hi, Hugh, and thanks, Anthony, for introduction. Yeah, we're Cambridge Blockchain Society. We're based in Cambridge University. So actually, I have a relatively straightforward question. So basically, will Nexus be expanding its offering in the future? I mean, now, based on my understanding, so Nexus is mainly focused on crypto-only user cases. So it's mainly protect people in the DeFi ecosystem. So do you have any plan to add coverage for things like earthquake or pandemics, or just something happening in our physical world? So just curious.
Yes, definitely. I think we're starting with crypto risks mainly because our early users are going to be crypto people, because you need to have like MetaMask and all that type of stuff to actually interact with the platform. So we wanted to provide products for our early user base, and so we're definitely staying within crypto risks for a little while. But the whole vision of Nexus is actually to build a generalized way to share risk with each other, no matter what the product is. And so something like earthquakes, hurricanes, natural catastrophe type risks is actually quite a good one, because you can create products that are remotely assessed. You don't need to get claims assessors on the ground or necessarily to actually pay claims and stuff like that. So it can work reasonably well. So that's the type of thing we'll probably go into. You know, probably give us a few years, unless someone really wants to buy some cover. We could probably do it now, but probably more likely in a couple of years.
Cool. And one more question about this is like, what's the greatest obstacle to adding these coverages? Do you have any idea?
Yeah, the biggest stuff, I mean, as with every startup, there's about 1 million things to do, and it's about prioritization. So it's really about if there's someone out there that wants to buy a certain amount of cover, then we can definitely put the effort in to create the product and make it available. But it's really a prioritization question.
Right, fair enough. Thanks. Yeah, good to know that. Really looking forward to this. Great.
Thank you very much. See you. Right, handing over to Vijay. Vijay is one of our most successful hackers who just won the Avalanche Smart Chain prizes in our recent hackathon, and is moving forward with getting funding for his startup VCred. So Vijay, over to you to talk about your questions or question.
Yeah, just thanks, Anthony. Yeah, I was really interested reading about the white paper on Nexus, and I was reading it, and it said like the biggest barrier is like there's like 50% of the cost for claim automation goes to IT and other costs in insurance companies. So my question is, claim automation is like a really good use case where insurance companies and reinsurance companies are struggling. So what's your view on how to optimize it, how to make it more user-friendly for DeFi?
Yeah, I mean, claims automation is an interesting one. One of the challenges is if you make an automated system, people will game it because they know the exact rules. So that's a challenge. And so you can get some gains on expense side, but then you pay more claims, and so are you better off? Who knows? But there are definitely areas that can be automated. I guess from Nexus's point of view, we've implemented a voting system, but that doesn't mean that individual people who vote can't hook their voting up to an automated system. So that's probably where things are likely to go. So we're not expecting all members to vote on all claims. We're expecting a subset of members who are probably more likely to be specialists to vote on most claims. And then if something goes weird, then it gets escalated up. So, you know, that's the type of approach we're taking, and we're expecting things to be automated where they can be. Probably not right now, but we're expecting more of that stuff in the future.
Got it. One more question, if I may. What about smart contracts, audits in other L1s? Like, are you planning to expand to other L1s like Avalanche, Binance, and so on?
Yeah, so right now we just cover Ethereum smart contracts, but we do have a new product coming out in 3 or 4 weeks' time that will start being able to cover smart contracts written on any other chain. Still with Nexus being on Ethereum, but you'd have to buy the cover on Ethereum, but the cover would cover protocols running on other chains. So that's going to be a pretty big upgrade that we're looking forward to.
Thanks.
Awesome. Thank you, Vijay. George, do you want to go through some of the rest of the questions?
Definitely fantastic questions coming in from everyone. Benedict had about 4 questions, but I'm just going to limit it to the first 2 in the kind of for time. So what do you think are the main barriers to having decentralized token-based insurance companies across all insurance products?
Yeah, there's a long way to go yet. There's quite a few different mechanics that you have to kind of balance and battle test and stuff like that. So it'll take a little while. And I think also, like, I mean, just in general, there's a user adoption of crypto is a big challenge that has to get across. Like, before we start offering products that are outside the crypto space, you probably need slick fiat on off ramps and stuff that abstracts away blockchain from the regular user because they don't really care. And so, you know, there's like a lot of kind of I'd probably describe it as infrastructure work that the communities need to do to make things easy for regular users. And I think once that starts happening, then you get more and more options. But right now, it's probably going to be stay in that niche until that infrastructure is built out.
Awesome. And then the second question is, do you think that the kind of Nexus Mutual voting system would work for more complex claims than things such as kind of smart contracts, where it can, as you mentioned, often be quite clear cut where the fault was come? So is that possible?
So there's definitely, we believe the voting system is generalized enough to apply to anything, but I think it's very important that we expect things to basically go down to specialists, because it's not going to make sense for a whole bunch of specialists to vote on every claim. Like, it's cost inefficient. And so what we expect the model to be doing is you end up with a couple of specialists determining claims, but also having the control mechanisms in place that if they do something wrong, then other people can get involved, and the decision can be escalated so that there's some control system in place. So basically, the system set up to default to the experts with a control system in place to counteract them if they do something against the best interest of the mutual, really.
Julius asks, what are your thoughts on Cover Protocol and AMA, who are 2 of the other kind of insurance protocols in the DeFi space, for those who haven't heard of them before?
Yeah, so I think Cover is kind of, I in particular don't quite think their economic model works, because I don't think prediction market-based mechanisms are capital efficient enough. So that's kind of my main view on Cover. On AMA are basically built on top of Nexus, and they distribute Nexus Cover. So they're basically turning some of the user frictions that Nexus has into really smooth streaming cover and easy to buy cover and stuff like that. So yeah, they're built on top of us, and they're quite a good partner project.
It's kind of like a Nexus layer 2.
Yeah, exactly. Yep.
Awesome. So Hans and we had 2 questions kind of surrounding this. So we've seen in crypto a lot of kind of big partnerships in recent months with kind of the likes of Visa and PayPal. So I was kind of wondering, are there any companies that you'd consider kind of partnering with outside of the blockchain industry, or might have a positive effect on Nexus Mutual and your growth?
Yeah, I mean, we're always potentially open to that type of thing. I mean, at some point, if we need to scale really large, then it's likely that we need big risk capital from somewhere. The reinsurance markets or insurance markets are a potential source of that. But then again, they have to be able to hold crypto, so I'm not quite sure how far down the path they are on that side of things. So, I'm definitely open for that type of thing, but it's probably more of a longer term piece. Insurance tends to move a bit slower than the PayPals of this world.
Yeah, okay. Stephen's asked, can you talk about the experience with the hack that you suffered and what can be done to kind of stop this moving forwards?
Yeah, sure. So, so just a quick background. I was personally tricked into sending a hacker a whole bunch of NXM tokens. They didn't get hold of my private keys. I was using basically a hardware wallet through MetaMask. But what did happen was they effectively gained access to my PC through a malicious docx file, and then they altered my MetaMask extension and basically said, here, you're doing some benign transaction, when actually it was sending them a whole lot of NXM tokens. And then you hit approve on MetaMask, and then it pushes it to the hardware wallet. And because the hardware wallet just shows hex code and it's hard to decipher, I just click through and hit approve. So I could have stopped it there. So it's ultimately my responsibility. But I guess what the thing is, it's a pretty sophisticated attack. The transaction that they spoofed was specifically crafted for me because no one else could actually do that transaction. So we know that. So it was a pretty high level kind of crafted attack. I think that the kind of two things that I would recommend people do are, one, make sure that you use a separate computer to sign transactions on that basically doesn't do anything apart from go to a few specific websites and do your signing. And the other thing is, make sure you know what this is after you're already using a hardware wallet. Make sure you check the to address on the hardware wallet against the address that you think you're supposed to be interacting with. So you can like double check that by copying across to Etherscan and stuff like that. So it slows down. It's a bit annoying, but if you've got material crypto, then definitely worthwhile doing that.
Yeah, definitely. Okay. One final question before I hand back to Anthony, which is from Emily, who's from the Harvard Law School. Are there any worlds or situations where Nexus would not have enough cover for all of the claims that come in?
Yes, we're specifically designed to be massively under collateralized because that's what we need to do for capital efficiency. That's how basically all insurance companies work. Yeah. So, I mean, to give you some idea, like large insurance companies operating gearing ratios or under collateralization ratios of 50 to 60 times. So we're currently at roughly 2 times. So we've got some level of gearing, but we want to get it more. But the key here is to diversify risks so that the probability of every claim happening at once is very low. Mm-hmm. So you've got enough money to cover everyone that could potentially claim. So you don't want the 100% guarantees because that's really capital efficient and you'll never be able to give a good enough price to the end consumer. But you don't want to take on too much risk on a you want enough diversification so you can get the gearing basically. So it's definitely a balance. But yeah, so technically a possibility, but we've hopefully managing capacity limits, and we have limits on we make sure no one, you can't take out too much cover on any one particular protocol, so that if a claim does happen, then it's limited in terms of the loss relative to the size of the mutual.
Fantastic.
Awesome. Right, over to James from Oxford Blockchain Society to ask his question.
Thanks, Anthony. So my question was, so I saw that Nexus had paid out a claim, I think it was like £30,000 or something a few months ago. How straightforward was it for kind of the community to choose to kind of pay out on that particular claim? Was there kind of much contention with was this a valid claim or not?
Yeah, so we paid out as a result of 2 main events. The BZX hack from a year ago, which is about that amount of money, and then we paid out about 2.5 million as a result of the YN hack about 2 months ago now. And so I think one of the interesting things is we've had, and then we denied claims as a result of Make It Out Black Thursday. So there's probably the three main events that have gone through, and I think I've been really happy with things because all of the claims have been very clear one way or another. There's definitely discussion in our Discord channels and amongst our community, but when it comes down to the voting, it seems to be pretty clear one way or another. So that's been good. A lot of the time when there is a hack, pretty much every time, within a day or even shorter, someone's written up an article about exactly what happened, what the issue was, etc. And our claims assessors have essentially used that to decide on if the claim's valid. So it's been working really well.
So is it correct to say it works like you stake your tokens on one side or the other of the decision? Is it transparent so I can know what other people are thinking about this particular decision, or is it anonymous until the actual decision is made?
You can see all votes on chain that have come before you, which isn't ideal, but hopefully when we get zero knowledge stuff a bit more out there, then we can do anonymous stuff in the future.
Thanks a lot. Yeah, that's my question. Cheers.
Awesome. Thanks, James. A few more questions going through on chat. Can you give an example of how you assess the risk of smart contracts?
Yeah, so we basically decided to use prediction market techniques like wisdom of the crowd to basically do the pricing. And so basically the number, people can, firstly, if they purchase the NXM token, they'll become a member of the mutual. They can contribute to it and they get the NXM token. And then they can secondarily, they can decide whether they want to do this or not. They can stake that token against specific smart contracts that they think are secure. And so the more people to stake, the lower the price and the more cover can be offered. So if no one stakes, then no cover can be offered on a particular risk. And so what we're really doing there is using, people can run their complicated analysis tools or actuarial analysis or whatever they want to do off chain, and then they can use that to inform their staking positions. And so the system just takes the amount of value that's staked against a particular contract to determine the price.
And a follow-up question has come in: what percentage attendance do you have on these votes when people are voting on whether to give cover or the risk of something?
Well, so the pricing is just done on how many people have staked, so that doesn't quite mean attendance on voting. The claims assessment, I'd say that's relatively small overall, but that's probably to be expected. Like it's probably in the low single digits there, and to me that's absolutely fine. I wouldn't expect every member of the mutual to be kind of an expert on the claims assessment side of things, so it's more going to be focused on the experts that are in there.
Very good. What are your strategies for growing the size of the mutual?
Basically distribution and new products. So we think right now to buy cover on Nexus, pretty much everyone, unless you're going through AMA, would go and do what they want to do on another site. So go and put money in Compound or Maker or whatever. And then they would come to Nexus and buy some cover. But the much better user experience, as we know from all insurance products, is basically you put the insurance purchase as close to the primary product purchase as possible. So, add on with one click and that type of thing. So that's the kind of stuff we're working on with a whole bunch of different people right now.
Awesome. Right, another live question coming in. Let's go to Vanessa.
Hi, I have a question regarding the future of the insurance market in crypto. Do you think all crypto protocols will be insured in the future?
I think insurance will be available in nearly all crypto protocols. In terms of are they insured, I guess there's a general question about which way it's going to go. Like, for example, the protocol could buy its own cover or insurance on behalf of users, or it could leave it up to end users themselves to buy on an opt-in basis. So right now we're kind of operating on the second one, but there are kind of different protocols that have kind of backstops internally themselves that aren't 100%, but they do provide some mechanisms. Like Aave, for example, they've got staking mechanisms behind the scenes, and if something bad happens, then in theory the Aave stakers get burned, and they can make the customers whole up to a certain levels if if they've got enough funds to do that.
So thank you very much, Vanessa. A few more questions that are coming in chat. What do you think of the state of auditing in general in crypto?
Massively under-resourced, I think, is the first thing. So it's next to impossible to get auditors right now, or you have to do it with a 3 to 4 month wait. And so people are even booking in audit slots, not knowing what they're going to build exactly, just because they need to get an audit slot. And so that's a big challenge for the space. But in general, it means that the top tier auditors are absolutely swamped. So it's a challenge that the space is working through right now.
And just kind of linked to that, how does the space deal with that? Because obviously you're trading off efficiency with reputation. Like a new auditor might come up every day. People want to use them because you want it's actually not the quality of the audit, it's the name attached to who's doing the auditing. So is the solution we're just going to see lots of spin outs of the best auditors from Relevit and OpenStep, let them go start their own shops, and then you trust this guy? Or how do we solve the situation? Because it's another bottleneck in Ethereum, effectively, if new innovation is going to come. How is this going to be solved?
Yeah, I mean, it's interesting. And we've also got people that are just not doing audits and putting it up there and saying very clearly, we haven't done an audit. But we've decided to launch anyway, and the risk is on you, which that's an interesting approach as well. I mean in general, these things happen because there's just a general shortage of quality people doing audits right now. The demand is just massive. So I think it'll balance out in time as things balance out. But yeah, I mean, I guess my perspective is there's a whole bunch of really good auditors out there that don't have the big brand names, and so. But lots of people and people putting money into your protocol often just want the big brand names because that gives them the comfort, right? So there's definitely a challenge there on those two things. So yeah, it will be solved in time, but basically the market needs to adjust its supply and demand, I think.
Yes. Wesley asks, what are your favorite DeFi projects in the space?
Oh, too many. I think I love the protocols that do something fundamentally new, and so advance the space forward. Like Uniswap and Uniswap v3 looks quite amazing to me. I mean, who knows how successful it will be exactly, but I think it's very interesting the approach that they're taking, and they're kind of pushing things forward. I guess I'm less interested in the ones that just build yield farm on top of protocol X and then just generate another token for yield farm type thing. It doesn't really feel like it's adding much fundamentally to the space. I'm more kind of interested in the fundamental building blocks. Like I guess Reflexive Finance is one example where they're creating like trying to create the most decentralized stablecoin. It's kind of like MakerDAO, but instead of having people set the interest rates, they've got a PID controller that adjusts the interest rate. So I think it's a fascinating experiment. Who knows how successful it will be, but I just think that it's a fascinating experiment because it's trying to push the space forward.
Awesome. Reflexer was actually, Stefan was in one of the Encode hackathons a year ago. He came third with Reflexer, which in hindsight looks a little bit, it speaks less of the judges. But I think he ended up raising Metacart did the first round weeks after that. So yeah, a very inspirational case. Jake from Leeds Blockchain asks, do you have a top 3 favorite books that you'd recommend or that have inspired you? This is the one question, by the way, everyone takes ages to think on, so feel free to have some thinking.
No, so I don't. I wish I had time to read more, but I have 2 young kids and a startup, and so reading is just not a thing I can do right now. So I'm going to bail on that question, really.
Absolutely. Is there any resources or things you would recommend for the intelligent student coming into blockchain?
I guess, I'm deep in the Ethereum space, so take that into account. But I think Week in Ethereum news has just been my mainstay for just years. and especially it's a bit more anchored on the dev side and less on the like big marketing side. So I think it's a really good one to keep up to date with what's going on.
Very good. Let's go through any other questions that we have. I mean, you definitely can't answer this, but I'm going to ask it anyway. Are you working on any partnerships with big insurance, with big traditional insurance firms?
Yeah, all of them, sure. No, yeah. No, look, I mean, I know about a bunch of them and all the rest of it, but it does feel quite early for them. So, you know, I think there are very few people in the insurance space that actually fundamentally understand blockchain, and a lot of people still view it as a potential expense saving technology, which then it competes against a whole bunch of other expense saving technology, and it doesn't really make too much sense in that context. So, you know, I think things are slowly changing, but I think they've got a bit to go yet.
Awesome. Another question, couple of questions coming in here. What jobs and opportunities are there within the Nexus kind of universe at the moment that you get involved in?
Yeah, so I think one of the interesting things we've done recently is we've set up a Nexus community fund, which is kind of like, it's a grant program to start with, but it's going to turn into a whole bunch of things. Like it's very wide ranging in what it can do. And so we're looking to scale our team actually via the community and via kind of grants and ongoing grants from that to help build, contribute to our code base, build on top of our code, build out distributors, do a whole bunch of different stuff. And so while we're not kind of hiring as the core team right now, it's definitely our method for scaling is actually going to be driven by that community fund. So if you're something you're interested in doing and want to get involved, then yeah, jump in our Discord, message Kendria, who's kind of a running point on this, and then she'll be able to help you take the next steps.
Also, I guess linked to that is a question here about whether we'll be seeing Nexus in a hackathon or any kind of bounty type situation where people can build AMA-like products or similar things to how AMA has built on Nexus. Will there be any of those opportunities coming up?
Yeah, so we are looking at that type of stuff as well, definitely. So yeah, keep your eye out for that. But also, if you do have a specific idea, and we actually going to list a few of them ourselves, then we're running our own internal grant program for stuff like that as well. So you know, we're going to use a whole bunch of different methods. So we're kind of at the start of that journey, and you'll see more of that stuff coming in the future.
Awesome, brilliant. George, have I missed any of the questions on chat?
There's one on regulation, why you chose a certain structure for Nexus Mutual, from Nathan. So he said, why did you choose the corporate governance structure of a limited liability by guarantee? And what's your opinions of Europe's new MICA regulation obliging crypto asset service providers to have an entity in Europe?
I'm not going to comment on the second one, but I can comment on the first one. So basically, there is a structure called a discretionary mutual, which is an existing type of structure. And so like there are like discretionary mutuals that run in the UK that have been running for over 100 years. And they are all set up using a company limited by guarantee, which essentially means there's no equity capital. It's not limited by shares, it's limited by guarantee. So each member of the mutual guarantees that if something goes wrong, then they guarantee £1 extra. So it's a very notional guarantee, but that's the way it's set up. And so these are kind of like, everything's run for members. It's in members, there's no equity, no profit. And so we're following exactly the same structure as that, which helps from a regulatory clarity point of view. And we're basically just automating the operations of a discretionary mutual using smart contracts running on Ethereum. But there's a very strong link between the legal documents of the company and the smart contracts that actually run. So I guess we're a bit unique in that space, probably the first ones to do that type of thing. And though there are a few other DAOs that are also linked to legal entities now running.
Awesome. And then just a question for myself. So Islamic finance has a kind of insurance model called Takaful, which has similarities to a mutual from how I see it. And we've seen how kind of efficient and user-led Nexus has been, which is kind of one of the similar goals of Takaful. So do you think that Islamic insurance companies might be some of the first movers in the space to start incorporating blockchain in their kind of operations?
Yes, potentially. I mean, it's hard to know exactly because I don't really have many kind of contacts in that type of area, but from a philosophical point of view, they're very closely aligned, and like members kind of run things, and it's all done for members. And I know that there are a bunch of discretionary mutuals that are that fit very natively with the technical stuff, and so there's stuff going on in Malaysia, not blockchain related, but more in the regular space.
Awesome. And then Jesse has a question saying that traditional insurers seem to have suffered quite a few large losses in recent years with regards to cybersecurity attacks, and kind of Nexus Mutual is kind of built around similar concepts in terms of insuring smart contracts. So kind of what's Nexus's model in being resilient to these kind of big losses in terms of this?
Yeah, it's interesting. I guess from our perspective, from my perspective, smart contracts harden a lot faster than cybersecurity. If you got $1 billion sitting in a smart contract, someone's going to try and find out pretty quickly if there's a bug or way of exploiting it. So I think the process from security to hardening of security is a lot faster than general cybersecurity risks.
I think that's it from the chat.
Awesome. So just one final one for me, Hugh. So you've got some big things coming up. You kind of touched on it during the questions there, but what can we look forward to in the next few weeks with Nexus?
Yeah, so we've got, I guess as I mentioned before, like one of our big launches coming up is protocol cover. So we started with smart contract cover, and which basically covers the bugs in the smart contracts. It's quite relatively narrowly defined, and so now we're going to be expanding that to also cover things like severe economic attacks, governance attacks, Oracle failures, but also specifically cover protocols running on other chains, as well as layer 2 systems and stuff coming up. So the risks in DeFi have evolved, and they will continue to evolve, and I guess we're also adjusting our products in light of that, how things have changed since we launched our first product nearly 2 years ago now. So yeah, it's been a great journey so far.
Awesome. Well, I think that brings us to a close. Hugh, thank you so much for awesome AMA. Loved having you.
No, thank you. It's been great being here, and lots of really good questions. So yeah, hopefully everyone enjoyed it.
Awesome. Well, as everyone who joined today, thank you for coming. Thank you for your questions and for doing the good work promoting blockchain on the ground. Do join us for the event in 2 weeks with Kane from Synthetics, where that'll be in a very early time slot of 10 a.m. Just heads up, 10 a.m. UK, so 11 a.m. CET. And for Americans, don't go to sleep because it'll be about 4 in the morning. But in the meantime, Hugh, thank you again. This will go on hopefully up on the YouTube and the Medium in about a week to 10 days or so, once we've done all the review and everything. But Hugh, for now, thank you again. Have a great evening, and see you all very soon.
Cool. Thanks, everyone.
Bye. Bye.